Good morning, traders. Matt Weller here, Global Head of Research with FOREX.com. Today is Thursday, the 30th of July, 2026, and there is a lot of news to digest. Markets are working their way through the FOMC meeting yesterday, major earnings after the bell. We've just had a Bank of England meeting, as well as a raft of data during the US session. And in today's video, I'll break down everything that you need to know ahead of today's trade. Let's get into it. For me, the biggest storyline are traders digesting the FOMC meeting yesterday. Despite perhaps more dissents than expected, three different Federal Reserve presidents dissented against the decision to hold interest rates steady. Markets are concerned that the Federal Reserve may be falling behind the curve on inflation that comes after a relatively neutral press conference from new chairman Kevin Warsh, in which he sort of downplayed the immediate need to raise interest rates, and markets reacted strongly, especially in the bond market, where 30-year yields rose to 5.24%, the highest level they've traded at in about 19 years. Meanwhile, looking ahead toward today's U.S. session, oil is edging lower. Major indices are rising. If you skip down to the bottom bullet point, you'll see that's primarily on the back of strong earnings from Microsoft and vow to protect cash flow and keep that positive. Meanwhile, that's being partially offset by a big decline in the stock of Meta or Facebook, which is falling 10% ahead of the US Open as free cash flow essentially evaporated, falling by more than 90% in the most recent quarter. Other news, we had the US GDP report, which came in lower than expected. That, of course, included the core PCE reading, the key focus of inflation for the Federal Reserve. That was as expected. We also had initial unemployment claims coming in roughly in line with expectations and near historic lows below the 200,000 level. Finally, back in the European session, the Bank of England decided to leave rates unchanged. This was mostly as expected. Again, maybe one dissent in favor of an immediate interest rate hike than expected, but the pound and other UK assets are mostly taking that decision in stride. Today's chart of the day is an opportunity for us to take a step back and look at the US dollar index. Here on a daily chart, we can see this big sell-off. Note that occurred despite a rise, especially on the long end, in yields. The dollar index has now broken below bullish trendline support off of the May lows. The next level to watch is around 100.50. That was a key level of previous resistance and then support earlier this month. If that level gives way, we could be looking further down toward the 38.2% Fibonacci retracement. That's at 100.20. And then if that level gives way, likely a move down toward the 100-day moving average and the 50% Fibonacci retracement closer to 99.70. Again, traders are very concerned that the Fed might be falling behind the curve on inflation, and as long as that concern exists, the dollar may remain under pressure. That is today's video. Thank you for taking a couple minutes out of your day to watch. If I could ask just one quick favor though before you go, please do drop a like on this video. It's a free way to show your support that helps us with the algorithms. And if you're not already, please do subscribe to our YouTube channel at FOREX.com for more videos like this. Thanks again, and best of luck with your trading today.